Yo, what's good, cryptocurrency fans out there? Welcome back to the Everything Altcoin channel. Today, we're going to be talking about some new AI altcoin infrastructures that you guys should pay attention to. Now, the last time I talked about some new altcoins was not too long ago, where I talked about Aeon, I talked about GitLabs. I'll leave that video in the cards up top for you guys to check out, but these is more infrastructure, bigger launches that came out not too long ago that we're going to be covering here, right? There's a lot from compute to data to robotics. All these new altcoins are tackling those, and I think they're going to be pretty interesting to keep an eye out on, especially since they're new. We'll see if we go into the bear market what the investing is going to look like for them and things like that. But I did want to bring these to your attention because there's a lot that is being built on crypto side as of right now. We've seen things like Banker start take off, VVV was taken off, Dolphin, Pod, all of these was taken off, all tackling different sectors of like AI, and I think these also may catch a bid depending on how things look within the market. And we're going to talk about 5 of them specifically here. First one we're going to get into is called Fabric Protocol. Now, you guys already know I'm into robotics, heavily into robotics. I think that is the next big narrative, that if you guys have missed the train on AI agents, hopefully you didn't, because it was so easy to capture that. You do not miss the train on robotics. Now, Fabric here is from OpenMind. These guys have been building out for a very long time here, and as you guys can see, they're at $45 million market cap, FDV of $203 million. You can see that circulating supply to total supply here is about just under a 5x difference here, and that's a little cause of concern just going into the bear market and possibly into the bull market, because I do believe that the vesting does start at the end of the year for Fabric, if not just at the beginning of 2027. That's for your private sale investors. They have like around a 12-month cliff, so that is going to start. And right now it came out, it is down 66% from its all-time highs of 3 months ago. Now, Fabric Foundation did put out this tweet here talking about Fabric Protocol, the infrastructure for the robot economy. I won't go over into all of it, just going to talk about some of the things here. Fabric is building the infrastructure for the robotic economy, right? We are in exciting times as the intersection between robotics, AI, and crypto provide the necessary tools to become a category defining leader. Now, Fabric Foundation is focused on building 4 pillars that would drive usage to the protocol, which is your robot financing, the agentic payment, data flywheel, and constitutional robotics. For robot financing here, Fabric finances the robot economy and connects global capital with the largest robotic build out of our generation while delivering real yield. Essentially, this is allowing people to gain passive rewards, passive income. Their revenue-based financing protocol, which is designed for robots OEM. Instead of borrowing through traditional loans, OEMs can access upfront capital by selling a portion of the future revenue tied to confirmed customer orders. So that's your robot financing. Now, you guys should already know what agentic payments are. We've already talked about that. I think they're doing X402 and things like that. So as robots become economically active, robots will need to pay and be paid for goods and services autonomously, from purchasing software and compute to paying for energy, maintenance, and services. Robot will participate directly in the economy. So you guys should already know about this agentic payments here. Now, you got the data flywheel here. This is important. Robotics is fundamentally a data problem. The companies that will win will not just build better hardware or better models. They will control the highest quality real world data and use it continuously improve performance and reliability and economics. So they have their own solutions. They have 2 different solutions, the real-time feedback application and the demand-driven marketplace here. So that is going to be how they're going to be tackling that pillar there. And the 4th pillar is constitutional robotics. Robots will be physical AI agents in the real world, making decisions, interacting with humans, and participating in the economy at scale. As robots become more autonomous and more integrated into daily life, the question is no longer just what can they do physically, but what should they do? Today, there's no shared framework that defines how robots should behave, who sets the rules, and who rules evolve over time. This creates 3 major problems. You're going to have how robots behave, how the control is centralized, and the stakeholders lack a voice, right? So that is all something that 4th pillar is tackling right there. Now, we're also going to get into what Asai has to think about these 5 altcoins that we're going to be talking about here. So before we get into talking about that, I would like to ask you guys, subscribe to the channel if you guys haven't already. We're on a road to 30K subscribers. If you guys would like to help out that, hit that red subscribe button. Don't forget to like the video, comment what you guys think down below. And while you guys are down here, you guys can hit that Discord link to join the Discord Discord to continue the crypto conversation we're having. And if you guys want to join the best crypto community out there, you guys can ask how does that Patreon group works. As you guys know, we have been getting into some bangers recently. We posted them up here as soon as everything started getting going on base again. We started killing it. Started off with pod, we killed it with the pod trade, and we killed it with a bunch of micro caps in the Discord group. So if you guys do not want to miss out on any of that, and then also check out the terminal, because the terminal is going to be the best tool that you guys can use moving forward from the bear to the bull market. This gives you a lot of tools that helps you analyze altcoins and maneuver in this market here. You guys can check out the post on Patreon. There's also a video demo for that, and you also get the code to save 40% off your first month, which is going to be aside 2026. You can use that to save 30% off your first month, to test out the group, get your feet wet, see if it's for you guys, right? And lastly, if you're looking for a cold storage wallet, I use Tangent. This is probably the best crypto card that you guys can use to store your crypto, even spend your USDT if you would like to, because they do have a card attached to the Tangent wallet itself, right? So you guys can use code everything altcoin to save yourself 10%. And let's continue on here. So I asked it about the 5 infrastructure plays, right? So essentially we kick it off with a robo here, the robotics lottery here, right? The thesis is right. Fabric protocol is building verifiable on-chain identity for robots, exactly the kind of infrastructure the machine economy needs. This narrative is validated by Figure AI, Tesla, and Nvidia, all racing to deploy humanoids. Now, next DAX listing in early May gives it a real catalyst. The falling wedge on the chart was legitimate technical setup. Now, it does talk about the problem with the entry, which is what I brought up to you guys, which is essentially the FDV to market cap gap lets you know that there's going to be some very big selling that comes up very soon here, right? You're buying a token with 204 FDV against $45 million market cap. That's a 4.5x dilution gap. The team and investor allocation locked up with 12-month cliff starts unlocking around February 2027. So that is going to happen in next year. I was wrong. I thought it was going to happen this year here, but of course, early 2027. That's a supply overhang over the next 9 months here. So depending on how the market looks, if the market continues to be, you know, sideways and pretty much bearish, that's killing valuable time. And then once the bull market comes back around, that's when more of the inflation is coming out as well. And it also mentioned a Sybil attack concern tied to Binance holders that got the airdrop, right? 100 million robo was distributed, right? That's another big thing there. So for the verdict here, the robotics narrative is real. Robo is a legitimate small cap play. The entry is the problem here, especially with the FDV gap looming and the airdrop controversy hanging over it. You're paying for the narrative premium before the protocol has shipped anything that justifies a $200 million evaluation. Wait for the unlock overhang to hit to find a better risk to reward. So this may be something to keep on your radar. Get prepared for the next bull market that maybe around February or so. We'll see how it reacts once the vesting starts to come out, because that robotics narrative is going to be huge and it could be a good catalyst for robo. Next we got Pearl. This one right here has had some controversy when it came out. It came out on Solana. It does look decent as of right now at a $35 million market cap. Same thing that, you know, we have the issue with robo. Essentially the same thing is here with Pearl as well. You can see the gap within the FDV here. This one has just under a 10x difference between the supply and total supply here. So there's going to be some drastic inflation that is going to be coming out very soon too as well. Seeing what Asai has to say, it's basically the Upbit bounce and Binance hangover. Now you guys know a lot of coins that have been getting listed on Upbit has been pumping the minute that they get listed on there. They do like a 2-3x and then obviously come back down. So the Upbit is like a pump exchange, sell the news type thing, right? This one is on a natural cool down after the Upbit and BitThumb listed in late April spike Pearl from 21 cents to 42 cents, a 67 rip in hours, right? You guys already know that as well. And then there was a Binance delisting on April 28th. That I did not know. Now, Pearl thesis is sound. AI data marketplace connecting verified experts to enterprise for model training. The Solana native execution makes sense for speed and low fees on microtransactions. Solana ecosystem plus Binance Alpha Spotlight equals a narrative visibility. Now the Binance delisting is the question mark. The delisting removes a major liquidity venue, right? And often signals a underlying issue, whether regulatory, technical, or operational. The Korean exchange pause to verify 90 million token movement suggests that some kind of supply slash escrow drama is playing out behind the scenes. Smart Money is sitting this one out, so it's talking about the smart money as of right now. But its verdict is that the AI data marketplace thesis is valid, right? Pearl at 20 cents is a better entry than it was at 42, but the Binance delisting is a structural headwind. It removes access for a huge portion of global value. Watch whether the Korean exchange activity picks up to compensate. Below 18 cents, pretty much it gives you a little support thesis there as well. So there's been some issues with this one. Now, for all of these, I only own one, which you guys we're going to cover next. As of right now, I own just a small bag of that. For the other ones, I did have them on the radar just in case I wanted to add them, like Fabric Protocol. That might just be added just because of the robotics narrative, but it does have that vesting that I'm very much concerned about, right? And the other ones as well do hold that same issue. Now, Kite AI, we talked about this so much on this channel. This is something that you guys should already know. It also has about that valuation gap as well. You guys can see just under a 5x difference between the circulating supply and total supply here. This vesting does start at the end of the year because I've done countless of research on this. We do got an in-depth video on this coming out again because this thing has been one of the strongest altcoins that has come out not too long ago. Because everything that's happening right now with AI agents, payment rails for AI, it fits that narrative so strong that even Asai believes at this point in time this is something to look into. As you guys can see, it does say this is something that you want to understand deeply. Kite AI launched a mainnet on April 30th with Agent Passport. This is the important thing. A cryptographic identity layer for AI agents with native X402 compatibility. It's not a white paper thesis. This ship infrastructure, the project says 90 plus service providers are integrated with pilot integrations with PayPal and Shopify. That is huge, right? That's enterprise adoption signal, not just crypto native speculation. That is the key right there, right? Of course, the price action tells you the story. 43% in a week, 70% in 30 days, consistently outperforming a weak broader market, right? Of course, the RSI is extended. It does bring that up and talks about the RSI and things like that. But unlike Robo, Kite has real usage metric to grow into the valuation. If 90 plus providers are processing agent payments and the fee revenue scales with the agent economy directly, right? It does talk about the FDV gap here. That is the looming concern there. The FDV problem is real, but difference here is a 2.35 billion FDV project on a project that just shipped mainnet means the market is pricing in years of growth, right? Future projection. That's fair if the agent economy actually happens. It's catastrophic if it doesn't. You're not buying cheap anymore. Now it's actually up a little bit since you guys already know, I've talked about this so many times on stream here. It does say smart money context that Nascent doesn't show it. I think that's because it's, I don't know. It doesn't show it as of right now, but the verdict for it is best fundamental story in this set by a mile. X402 plus agent passport stack is exactly what agent economy needs. Right now at 23 cents, you're paying a premium, but nonsense. Not nonsense, right? If you believe in AI agents are the multi-trillion-dollar market in 3 to 5 years, Kite at a $535 million market cap is very early. So you guys already know Kite. I'm super bullish on Kite. You guys heard me so many times here. This one isn't the newer altcoins. This actually came out a little bit earlier than most of these on this list here, but it's still something that you guys should have on your radar going forward. Next, we got Gensyn, which it has the best ticker, which is AI, right? Market cap is $45 million to the FDV of $349 million. You guys can see as well, they all have that kind of supply gap because they're all new pretty much, and the vesting hasn't pretty much started for this. Now, Gensyn is also tackling compute, which you guys already know. Larry Fink has said compute is a big topic in AI. As you guys can see, BlackRock CEO Larry Fink, the United States is short on power. I believe a new asset class will be buying futures on compute. The race for AI compute is accelerating, right? Massive capital could flow into decentralized compute and crypto infrastructure. So compute is a huge topic here. This is why we're going to be talking about Gensyn here. Now, Gensyn, they put out this tweet here not too long ago. Gensyn Gensyn's decentralized infrastructure allows AI to train, verify, trade, and evolve over a natural set of resource rails, provisioned by anyone and available to all, humans and machines alike. Gensyn Networks enables the future of machine learning to be a higher scale, lower cost, and more accessible than the existing hyperscaler approach. Now, their first application, which is Delphi Open, which is information markets, aggregates domain knowledge on a broad array of topics. Information markets serve as infrastructure to scale the machine intelligence by allowing anyone to create a market and anyone to trade information in a market. By enabling the buying and selling of information in this way, Delphi becomes the agentic bazaar, right? And through various learning techniques allows machine learning to scale without centralized coordination. This lets users to contribute to the future of AI on their own terms without being beholden to the centralized providers with outsized control. Now let's go see what Asai has to say, because Asai did bring up something interesting. I feel like there's a few, let's just look at it. So Gensyn is an open infrastructure layer for AI, compute, data, information exchange for decentralized AI models. That's the right narrative, built on Ethereum, Binance Alpha, Spotlight, all legitimate, but the numbers do not reconcile, right? CoinGecko shows the FDV against the, we talked about that, but Dex Screener also shows the FDV being 16 million against a $46 million market cap. So that is an issue that Dex Screener has to change, because Asai is looking into all of this, is looking into CoinGecko, is looking into Dex Screener. So sometimes when it sees things like that, it does throw it off a little bit here and figuring out what's going on, right? So that's a little Dex Screener problem there as well, right? The flow data on Dex Screener shows 49% buy ratio over the past 24 hours, essentially balanced, right? The liquidity is 1.5 million against $17 million volume on CoinGecko. The volume to liquidity ratio is 10x, elevated but manageable for a newer token, right? The verdict is that the thesis is right? The centralized AI compute infrastructure here, but the data quality right now is poor. The FDV discrepancy is large on a 20-day-old pair. It's a red flag. So we got to get this cleaned up before Asai can actually recommend it or even really highly talk about it. Next, we got Open Gradient here, OPG, which launched on Virtual Protocol as a Titan launch. $45 million market cap, FDV of $242 million. Now, this has been highly compared to Venice AI, as they're building out a ecosystem that supports verifiable intelligence at scale. Pay for AI compute here. The token itself powers payment for compute on Open Gradient using X402, and agents can pay for LLM inference instantly with transparent usage based on pricing, right? Outputs are returned with T attestations, enabling secure and audible compute without centralized providers. So the key thing is here, essentially AI agents could pay for their own inference. That is why it got compared a little bit to Venice AI there as well. And then they have a little bit more here: model creator incentives, inference on the model hub pays OPG to model creators, right? With millions of inference processed and thousands of models live, the model hub will use OPG to create revenue streams to incentivize contribution of AI models for developers and agent use. So they're paying people to create models, pretty much, right? So this is actually another pretty good thing here, and it creates another revenue stream as well. And holding the token itself unlocks premium features across apps. Get higher rate limits and premium features with the OPG token on Bitcoin AI today, and MemeSync AI Twin.Fund soon. So they're actually allowing the token to actually be a utility token across the board, doing different things, getting you higher rates on your inferences from the LLM and other premium features, whatever these products actually provide as well. Now, they do have the economic flywheel, which is the OPG is self-reinforcing loop, right? Usage drives token payments for inference, payment reward models / agent builders. Better models attract more usage. The flywheel builds the network effects and drive value for both developers and token holders. We always love that, we want some good things as token holders as well. So as this drives demand up for the token holders, that means the price goes up, and that's what we like. Now, getting into what Asai has to say here, which Aside calls it the post TGE hangover with the MICAR tailwind. It highlights that compliance angle is interesting. They partner with the MICAR white paper to prepare a compliant white paper under the EU regulation for an AI inference network targeting institutional and enterprise customers. EU regulatory clarity is a genuine long-term moat that is different from most AI tokens that are purely retail facing. Now, it does talk about the flow right now that is happening in the past 24 hours. The flow data is ugly. Deck screener shows 38% buy ratio over the past 24 hours. That's net selling, not accumulation. The pair is only 28 days old, so we already know that, but it's also kind of like we are also in a bear market, so I wouldn't expect too much unless some big news happens where they partner with somebody, right? The verifiable AI inference story is real. They claim 2,000 plus models supported and millions of inference process. We just kind of read that, but those are all self-reported metrics without independent verification. For a 28-day-old token, they are impossible to audit right now, so it's still kind of risky to figure out what's going on. And it's also post TGE bleed trade. I actually didn't see the vesting on what the vesting is going to look like for them, how much the airdrop was for the the virtuals investors, things like that, right? So that's something that we got to look into for open gradient. But I think that these 5 altcoins here should be on your radar if you're interested in the AI trade. They do have vesting that comes over time, so that is also going to be a risky side of things that you're going to look into, especially if this bear market gets drawn out to the end of the year and maybe even potentially early 2027. We'll see how things play out, but these are 5 altcoins. Let me know what you guys think in the comment section down below, and if you guys haven't subscribed already yet, please do so. We're on the road to 30k subscribers, and I'll check you guys later. Peace, YouTube.